Good morning. This is Vince Lanci with the Gold Fix, the Op Trader Gold Fix at 8 a.m. October 18th, 2018. I want to keep it tight today. Instead of working top down, we're going to work bottom up because we have some actionable trades on the radar. By some in gold, that's two, and you are happy to have two choices possibly. If you're tuning in and you have access to the website, I would ask you to go to the Insights category. You do not need to be a paying subscriber for that access. However, you will be soon. The most recent post says charts. You can see it on my screen. Charts for Op Traders Gold Fix. All right, those are visual aids. Please click on that as I am right now. If you're a subscriber and you're logged in, I can see you if you have questions in the Q&A on another screen that I'm using. Okay. These are the charts that we'll be dealing with today. We have some levels. We will also be very briefly going through all the markets before we go through the levels. And I also want to turn you guys onto something that we've been sharing with subscribers, and we're going to start sharing with registered people that register for the newsletter. If you are not a subscriber, I strongly encourage you to sign up for the newsletter. It's an email. Get an email, see what's going on, make a decision down the road. But sign up for the email so you can get the alerts, the macro alerts, I would say. The real-time alerts come for subscribers. And this is information by professionals, for professionals, and for people who want to trade like professionals. We'll help you out with that. Okay, so this is Bannock Burns report. We'll be going through that. That'll be the rumination part of the conversation. Let's start out today. Okay, notice the dollar, the DXY, is down 0.06%. I want to look at that chart actively before we get to the site. All right, this is where we are right now. That's an hourly chart. Okay, gold is up trading. Well, gold futures are trading 1227.80. You may look at that and say, "Oh, gold's up with the dollar down." Don't put too much credence in that right now, especially with large open interest on the short side. The market could diverge. Gold could be reassessing, or I say reestablishing, its levels against multiple currencies. And by that I mean, if you look within the DXY at the individual dollar pairings, the dollar yuan is, again, I have offshore and onshore. CNH is offshore on this system. CNY is onshore. Both are important. When during the day, I look at the offshore, and the offshore is higher. That means it's weaker. So for all intents and purposes, that's a bearish sign for gold, and gold is not lower. So take that any way you want to. Dollar yen is a little bit lower today so far after coming off some serious highs. And by lower, that means it's stronger against the US dollar. That is bullish for gold, if you want to look at these things individually. The euro, after having a nice spike higher, and then which precipitated some serious selling, has had a bounce on the hourly, but is lower right now. Is coming off. You can look at that as a bull flag, but let's not get technical today. All right. So what we have right now is we have the dollar is mildly lower. You should call that unchanged for trading purposes. Gold slippage, precious metal slippage is bigger than the dollar's, the dollar being down 0.06%. So it's the dollar is stronger against the Chinese yuan. The dollar is weaker against the yen. The dollar is slightly stronger. I'm sorry, slightly weaker against the euro. Your other currencies seem to be, by other, I mean emerging markets and G20 currencies, are mixed, but mixed to slightly higher. right now. The big mover yesterday on the currency market, which had absolutely very little effect on gold, maybe a little bit of a bullish bias, was the British pound being weaker as well as the euro being weaker. But let's get to gold. And we'll go to I'm going to go to the charts that were put together about 15 minutes ago for this presentation, and let's make it so that everyone can see what they're looking at if they're not looking at it on a computer. All right. We're going to start with the charts are not in the order that I want to present them, but this is what we have. I come in and I see gold flatlining overnight, and we have what is a potential signal on a volatility based trading system, which is with the system I primarily use in gold. It's very tight. The bands are very tight. I've already had my other criteria met, and I'm going to ignore this because it's the first hour of the day. So, but I'm going to pay attention enough to say, what's the 4 hour look like? And the 4 hour is interesting in a bearish way, but interesting in general. Here's what we have going on in the 4 hour, which the criteria that you don't see on the screen were met. That puts it on the radar. All right. If you go to the bottom, 5-day and 20-day volatility on the 4 hour. The 5-day is 50% of the 20-day. It has reached that. It has to reach it in the last 3 bars. There's some criteria there that I'm not going to divulge. And then you look at the Bollinger Bands themselves. Again, my Bollinger Bands are 1.5 standard deviations wide. Default is 2. I use 1.5. Different markets, different standard deviations. So in gold, it's 1.5. Here we are looking at gold right now in a 4-hour tightening. It's absolutely on our radar, and I have prices. And the prices are very simple. Let's make this a little bit bigger. The prices are on a 4 or 240-minute close under 1224.76. If you look at the yellow numbers up there, or above 1233.67, I will get a signal that volatility will expand, is likely to expand, and in the direction of that 4-hour settlement. So if when this was taken, there were 2 hours and 29 minutes left in the cycle. If we were below that price I just described, 1224.76, and the cycle were over, I would be very inclined to be short. I have been looking to be short for a while from observational intuition, but have had no signal to do that. What we have now on this chart is, I think, a very good risk reward opportunity. Here's how you want it to go down if you're going to play or look and learn, if you're not playing, how this system is used. What we want is, if we're going to short it, we want the market below the lower band of the Bollinger Band. It's actually a lower number than 1224.76. Call it 1223. All right. We want it below that number, 1223, we'll call it. We don't want it $10 below that number. We want it $1 below that number, because $10 below that number and the trade has already happened. And although the market may continue lower for the rest of the day, month, year, infinity, the risk reward isn't there according to my criteria. You want the market, I want the market $1 to $2, $3 even under the Bollinger Band when the 4-hour cycle closes. That presents us with the risk. The risk is you're short at the end of the 4 hours. That's the royal you. That means me and anyone who makes their own decisions. And your stop out is the Bollinger Band. Again, when this is right, usually very quickly. When this is wrong, it very quickly. And by that, I mean, you're right or wrong, volatility is expanding, just not in the direction you bet it was. A lot of people, I've been told to use it as a reversal system. I did that when I first created it, but psychologically, it was just too rough for me to do. 2 bites at the apple are permitted. I just don't take them. frees me up mentally so I can do other trades. I don't have the bandwidth to multitask like traders like Larry do, who can compartmentalize probably a lot better than I can. So I have to be much more quantified and systematic to keep my own excitement in check. As you can, if you know me personally from my years on the floor as Siggy, or if you know me from the chat room or from this broadcast, you can probably tell that I'm a little bit excited about the potential here. And and I'm excited because I have made a living in gold and precious metals, and I'll get signals in other products and trade them. But it's just nice to have one in a product that you have an ego vested interest in. Know your own shortcomings. Okay, so here we go. This is what we want. We want gold to be under 220, 1223, but not too far under. I think ideally what you would like to see is gold to be between 1223 and the bottom of that wick on the 4-hour chart before, which comes in, I think, around 12, call it 1221 and a half. That would be ideal, and also fit in with trade flow and intuition, and the fact that I think that long wick itself is bullish. But if we start to retest it, that's stop fishing, and it just corroborates what the system is telling me without any emotion. All right, let's be realistically here. The market could easily reverse. We have the signal to be long above 1233 and change. Again, it would be nice if the market did rally above 1233, but was under 1236, 1237. Remember, technically speaking, I don't see a reason, and neither does Michael Moore, to be extremely excited for an extension of a rally until we get above 1237. And even the most simple technician, and I'm not calling Michael that at all, would see that wick on the hourly stops a little bit above 1236. So you can see why people would say that. There are also trend lines that come in, but I'm looking at the downside because, quite frankly, if we do pierce the downside and then head towards the upside, uh, and you get the breakout on the upside, I'd say there is a very good chance you'll be stopped out the other way. And it'll just be a bigger trading range that you've sold the lows on and bought the highs. That's why I don't like to do two bites at the apple. But that's it. So that's the trade. So once I've seen that, this is what I saw. So now I'm going to say to myself, why am I wrong? Or what could make this go wrong? Well, the first thing I did was I looked at gold futures daily. All right. And the gold futures daily chart makes me more excited because you see we had a 4-day, if you understand it all, the system, we had a 4-day uh, volatility expansion higher, and we're now back with inside the Bollinger Band. In fact, I could see a trader like Larry not even looking at this, but already intuiting that it might be a sale here. Um, I've seen him execute shorts on the S&P or the ES when they were right inside the Bollinger Bands on my system. So trying to get inside his mind using my stuff. But this chart, this daily chart, says we have a negation of the upside momentum. Now, that's a volatility thing. A technical person could easily look at this and say, the last 3 days are a bull flag, and you should be looking to buy breakouts higher. And you know what? That's fine. I agree with that. But I'm saying that this does not negate what I'm saying. We have potential for a nice washout lower intraday. And this chart, this daily chart, says that the impulsive move to the upside is done for a day or two in all probability. And if it does impulsively move higher, we're not going to be on board because that's not how the system works. So first check on my objectivity says I should still be bearish. Next check, I go to the dollar index and I see I see more reason to well, actually I see the reason to not be so excited about being bearish in gold. If you are looking at the dollar, this is a 4-hour chart. The dollar had a nice 4-hour expansion. We didn't trade on it, but that would have been a good signal to trade on. That now has its momentum broken. So gold inverted to the dollar in a perfect world. um, takes its cue from this, and if this is correct on the same system, saying that there's a likelihood that the dollar rally is over for the next 4 to 16 hours, then that would be bullish for gold. So there's the fly in the ointment. And here comes the rationalization. Dollar gold relationship hasn't really been the big deal right now for the last 2 weeks. And by that, I mean sometimes gold overperforms on the upside, sometimes it underperforms on the upside. 2 weeks before that, gold definitely underperformed on the upside and overperformed on the downside. So, what I'm looking at here is, does gold care about the DXY? It always cares about the dollar, but the DXY doesn't weight particular dollar pairings that may be as relevant to gold as they used to be. By that I mean dollar yen used to be extremely important to gold, but yesterday it was the euro and the British pound that were important to gold. And since the trade war started, it's been the dollar yuan. So as I said earlier, you have a weaker yuan, which I don't even know if I'm saying that right, but you have a weaker Chinese currency, which is not bullish for gold. You have a dollar that's essentially flat and no news out of Europe on the Brexit side. That says to me that I want to put less emphasis on this dollar signal than normal. But my opinion doesn't matter. My opinion is rationalizing. Beginning traders, please, if you get anything out of this conversation, take this away. I came in and I saw a potential bearish signal in gold, and I got excited. And when you start getting excited, you do things called confirmation bias. You see what you want to see, or what we used to call ocular regression. Um, Basically, the whole concept of the sixth sense was a trader who doesn't see his own mistakes. So I'm looking at the dollar index and I see clearly a reason to not be bearish in gold based on my own system. And here I am telling you I'm still bearish. That is my bias today. My bias is I want to be short gold. I wanted to be short gold for the last 3 days for different reasons and flows and order flows and information I get from the market. Um, uh, but I haven't gotten a signal. Now I'm close to a signal, and I'm engaged to it now. I'm about to be married to it. So I control my own subjectivity and biases by saying I've already noticed. Right? If you're listening closely, and you can get through the thought process. I'm giving you the thought process of a trader, good or bad. This is how traders think, or at least I do. Here I am looking at the dollar index, saying, "Oh crap, this is bullish for gold." I'm not going to pay attention to that because I'm biased bearish. So, but I'm not going to go out there and sell it because, thankfully, I have a system that won't let me, and that system says you cannot sell it. Well, that's silver. We'll come to silver in a second. That system says you cannot sell it until it goes there. That is my boss. Uh, Although sometimes I ignore my boss. I put silver in here because it just made me more bearish. But let's be realistic. I'll explain why this is not necessarily something to be excited about if you are bearish, as I am on gold. The 240-minute system in silver broke out this morning and gave you a sell signal. I did not do that. I did not trade on that. Again, I don't like to trade the first hour in precious metals. Silver normally, or at least over the last 10 years, silver leads gold, is more volatile than gold. So if silver's lower and silver continues lower, gold's to follow. Equity traders, think of the NASDAQ breaking before the S&P does. The problem with that concept is it's true. But the problem is if silver reverses, then that makes gold the stronger asset in a weak silver market. So if silver reverses higher and rallies back to unchanged, gold could be up $10. Look at it from an equity perspective. The Nasdaq is down 1%, and the S&P is down, 0.2%. The explanation: flight to safety. Put safety in quotes if you like. So flight to safety. Well, when that's done, I think the S&P is going to track the Nasdaq lower. I think that's a good idea. Problem is, you short the S&P, the Nasdaq reverses 0.5% higher, and the S&P, because it's already got buying in it, takes off and rallies a percent. So these these tracking or trading concepts, you have to be aware of the fact that you know you may be uh, right to say that this is a leading indicator of that. But when that doesn't follow and this reverses, then that is going to rip the other way. It's kind of like positive earnings coming out and the stock doing nothing. 10 minutes later, it's $5 lower. You get what I'm talking about here. But silver just makes me want to be more bearish, but I am properly educated on silver. It was my first product I trade, and I've been through a lot of crises in there. So why don't we go, now that you've seen this in a dry chart, let's look where the markets are right now for the next 3 minutes. It's 8:21. I'm actually on a schedule for a change. All right, so why don't we go to uh, the gold market? There we go. Gold is 1227 and a half on the hourly chart. Right on the hourly chart, I'm saying I'm looking at this saying the hourly system is saying that we're pretty close to possibly having a breakout higher. Uh, but again, I don't like to trade the first hour. I don't never trade the first hour, but I don't like to. The 4 hour will probably show the same numbers, uh, simply because. Sorry about all the trend lines there. We're not doing technical stuff today, but the 4 hour is kind of saying uh, you're on the radar for gold to go lower. But as it stands right now, we could have another 4 hours of sideways movement within this range, which would just make the Bollinger Bands get even tighter and give you an even better risk reward should a signal hit. But right now, I put my alert at 1224. I get an alert if the market trades 1224, and then I make a decision based on price, based on action, and most importantly, based on where the Bollinger Bands are. They should be widening with the middle line going in the direction that I want to play. Right now, I got nothing to say. Um, that's it. Technical numbers, nothing violently changed in gold and silver. But again, the actionable levels today for me are a trade that could last anywhere from 4 to 16 hours, could be triggered, will likely be triggered. How's that? Will likely be triggered if gold is below 1223 on a 240-minute basis. If you look at my clock, I'm on Eastern time. My cycle here ends in an hour and 36 minutes. It's under the price. The reason I say 4 to 16 hours is because there are three ways you get out of these trades. One, you're right. Two, you're wrong in terms of price. Three, the market goes sideways. If the market goes sideways for 2 or 3 bars, then that negates the signal. You didn't get a volatility breakout signal. Get out and look at something else to trade. All right. So if gold is rallying a little bit, let's see what silver's doing. Right. All right. We know silver's weaker. Silver's bouncing. But a technical person would probably say, actually, if you were trading this, you would say it's safe to be short under 1458. And we're trading 1456. We could be stopped out before the sentence is over. So you can safely say that silver is not a factor in the trading of in the calculus for gold today. It's 824. I do want to put something up. I do want to put something up here for people to look at. We're going to post this on the site. This is Mark Chandler stuff. His focus is FX, and we have plenty of people on the site that know FX. Michael being one of them. But I like to read him because he is much more. He gives me a macro point of view, and then he talks about equities. Chinese equities are off, and he emphasizes why. He talks about nations, and he talks about economic policies. This is an economist trying to give trading advice, and I like it because when guys like when guys like Mark and Alan Hill talk, I get an education on the why the market sold off, and I can look for that as information to corroborate. So if I get a signal to be bearish on something, and I've already had a bias from trade flows and my own intuition, and I see a headline come across that fundamentally corroborates things, that just makes me more, interested in the trade. All right, the point is going to be dry. Okay, so this is more comment on Italy. So Italy's not ending. Oil. The EIA reported the U.S. oil inventories rose almost 6.5 million barrels. I want to make a comment on that. He says the contract posted a bearish downside day. Oil people, I pay close attention to the Brent WTI spread, and my bias is that as oil rallies, that spread blows out, and as oil drops, that spread should come in. Here we are. WTI is dropping, and the spread is blowing out, meaning Brent is not following. We're now, I believe, okay, 826. All right, we're gonna wrap it up. If WTI keeps selling off and Brent doesn't follow, that's a regional issue. Keep that in mind. And that Brent WTI idea that I have is wrong. So have a great day trading. Look for you in the chat. And let's hope we get a trigger on gold. Talk to you later. Bye.